Many of our clients receive equity compensation and have become wealthy by holding on to their company stock. Most of those clients have had a good experience and have seen significant growth, want to continue to have growth and are reluctant to sell. Many of them are in the high tax bracket and are reluctant to pay 37% tax to diversify. And so I'd say we certainly have an investor inertia problem that is difficult to solve. Many of the clients come in and they might have a diversified retirement plan, but their taxable assets tend to be in a single stock. One of the ways that we will diversify is to consider using exchange fund, and we found that that's an easy conversation. They continue to have upside growth. They don't have the initial tax cost of what you would get in a traditional sale. And so that's a good first step for someone that maybe haven't sold much of their stock before. I think that the best way to explain the benefit of the exchange fund is to do a side-by-side comparison. Their cost basis, here's the net proceeds that we could invest in a broadly diversified portfolio versus taking that stock on a free tax basis, exchanging it, growing it for a period of years, and then maybe in retirement when they actually need liquidity and they need income and cash flow from the portfolio, we would expect to have a larger pool of assets at that point, and they could compound that return pre-tax over the years. Once we agree that the exchange fund makes sense and the client's on board, we need to find capacity. A lot of our clients work for the mega cap tech companies, and historically we've had a hard time finding a meaningful amount of capacity with an exchange fund in those stocks. We find an amount that the clients are comfortable setting aside for the long-term part of their portfolio and managing liquidity needs and income needs with the diversified portfolio that they have. For a lot of our clients that are using an exchange fund, it is a significant part of their overall portfolio that we're managing. Make sure that the client really understands the trade-offs of selling traditionally, paying taxes and having that capital to use versus using an exchange product and being patient and letting it work for you over time.